स्वागत किया है मेरे यूट्यूब चैनल से। बात करेंगे आईपीओ के बारे में जो एचडीएफसी सिक्योरिटी ने सेल्स और रेस 2.5 लाख करोड़ आईपीओ boom in 2026 could create liquidity and range hedged HDFC Securities base Nifty at 28,720. HDFC Security flag IPO lead liquidity pressures and feel uncertainty for 2026, but expected policy supported domestic demand and easing the global risks to it, earning recovery and market stability. Indian market entered 2026 balancing growth optimism with risks from a massive IPO pipeline and weak field flow. HDFC Securities says policy supported domestic liquidity easing global risks and violation correction driven a potential gold lock recovery with 16% earning growth. The Indian equity market heads into 2026 facing an unusual paradox. On the one hand, optimisms around growth, earning recovery, and policy support it building on the radars. A flood of new listing threatens to stretch liquidity and test investor appetite. According to HDFC Security, the coming year could well be defined by how market negative this decline balance. The most immediate challenge is the sheer scale of the IPO pipeline. More than 190 companies are expected to top the primary market in 2026, collectively seeking to raise over 2.5 lakhs crore shows a heavy insurance calendar raise a fundamental question. Will the IPO rise enough, killing the ghost that's laid the golden eggs? HDFC Securities flag and the risks of the liquidity drain in the secondary market as capital is diverted toward a new listening, with the investor fund being absorbed by fresh proper lending activity and price discovery in listed stock could come under pressure. Compounding this concern is the uncertainty around the foreign investor flow. Even after a meaningful consolidation in 2025, Indian equity continued to trade at a premium to other earnings markets such as China and Brazil. Foreign institutional investors pulled out nearly just 3 lakhs crore from Indian equity in 2025. While there is hope that flow and could stabilize for even reverse in 2026, HDFC Security cautions that several factors may still keep foreign capital on the sidelines. They said the broader global and the domestic breakdowns after reason for the guarded optimism the global trade are certainly expected to gradually come down. Aided by the easing geopolitical tension and the prospect of the tariff reversal, Trump's trade politics policies which have been a major source of disruption is expected to diminish the further as a dominant influence on the global economy. Emerging the market rotation is anticipated with India as a key beneficiary, it added.